Facebook story. Thank you so much, Dennis.
Okay.
Facebook might be shining, but gold is not. The once hot commodity is having a good month, but is down more than 20% so far this year. Where's the bottom? Joining us now by phone is Jim Rogers, chairman of Rogers Holdings. Jim, great to talk to you, even if you're half a world away. Where is the bottom?
Oh, gosh, Dagan, how should I know? Watch Fox Business News. They know.
Well, that's why we have you on Fox Business News, because I would expect you to know certainly more than most. Do you have a sense of how far it can fall at this point?
Well, yes, I expected it to go to 1,200, which it did, and I bought a little bit just in case. I suspect, Dagan, over the next year or two, gold will make a complicated bottom. It went up 12 years in a row, which is extremely unusual. I know the anomaly was gold's strength for 12 years, so I suspect it will not make a normal bottom. The anomaly in the correction will be how far it goes and where it goes. I don't know. 50% corrections are fairly normal, even in bull markets, so that would be 960, say. I'm not a market timer. I'm not a very good trader. I'm just pointing out to you that between $900 and $1,000 would be a fairly normal correction for something like gold. I own it. I'm not selling it. If it goes down again, I hope I'm smart enough to buy more.
Well, why would gold, over the long run, if it follows inflation, why would it outperform inflation? Why wouldn't you do the same in some Treasury inflation-protected securities, for example?
Well, first of all, the way they account for the Treasury inflation securities are a sham. I mean, please, if you get your advice or use U.S. government accounting, you're going to go broke, Dagan. So please, if you're going to look at those things, check very carefully how they work.
Well, then why would it outperform the stock market if based on inflation?
What, gold or Treasury?
Gold. Well,
it may not. It hasn't, certainly here in the last year or so. It's done worse than anything in the past, than most anything in the past year or two. But Dagan, remember, it went up 12 years in a row. It had an astonishing run. So I presume that it will not just be inflation that's occurring. You're having governments around the world, for the first time in recorded history, all major central banks printing money to debase their currency. This has never happened before. And always in the past, when something like this for an individual country has occurred, it's always ended very, very badly. I presume it will this time, too.
Is there a store of value, though, that would perform better than gold, that you like more than gold at this point?
Oh, I'm sure that sugar or rice or, some of the agricultural products would be extremely depressed. Sugar is down 75% from its all-time high. There's not much that's down 75% from its all-time high. I'm sure that all of your viewers can find something that will do as well as or better than gold, but I'm not selling my gold.
In terms of sellers and buyers, Jim, do you think that the average investor has made money on gold? Even though it was up 12 years in a row, individuals have a tendency to buy at the wrong time, and it's been a shocking and ugly come down for some, not just the year, but it's off 30% from the high hit about 2 years ago. Do you think the average person made money on gold?
Well, that's an extremely good, insightful point. Let's see, gold is, everybody who bought gold in the last 3 years, I guess, is losing money now. And as you point out, most people get their timing pretty hopeless. I don't know who the average investor is, but it's certainly clear that anybody who bought gold nearly everybody who bought gold in the last 3 years is losing money.
Jim, it was good to see you. Thank you so much. Be well.
Oh, see you. Thank you. You should watch Fox Business News. They got good answers.
Well, because you're our guest. Thank you, Jim. Be well.
Good advice there. All right, we'll get back to the markets at a moment.